Hey guys, it is Julie here with TipRanks, and today we're taking a look at 3 Analyst Top Stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at TipRanks Analyst Top Stocks. Now these are stocks that come in with a strong buy rating according to some of the best performing Wall Street analysts. So we're going to take a look at these companies, what it is that they do, and what Wall Street is predicting for their stock's future. You can follow along over on TipRanks.com, and don't forget to make sure you've downloaded the TipRanks mobile app as well, so you can access the wisdom of over 8,500 Wall Street analysts on the go. Links will be in the description down below. Now let's take a look at our Analyst Top Stocks. From the TipRanks website, you can find this page under Investment Ideas. Here you're going to see the analyst consensus by sector, which ones come in with the most strong buys, moderate buys, and sells. So we have technology and energy at the very top here. Down below, we can break it down to the most recommended stocks. We're going to be looking at strong buys in any market cap or sector. You'll see the most recent ratings and other details on the companies. First up, we're taking a closer look at Delta Airlines. Their stock trades under the ticker DAL, currently priced just shy of $36 per share. Now, over the past year, they are up 17%, and that includes growth of 7% in the last 6 months. But you can see they have been cooling off recently, losing 26% in the last 3 months. Delta is one of the major airlines in the United States. And they are actually one of the world's oldest airlines in operation. They operate more than 4,000 daily flights to more than 280 destinations on 6 continents. They expect to serve nearly 200 million customers this year and are recognized as North America's most on-time airline. Now, as you saw on their stock chart, they have been facing some headwinds lately. Now, their last quarterly report came out in July, and they did have an earnings beat. However, the company did provide some disappointing future guidance that was related to high fuel costs. Delta is now anticipating an increase to their average fuel cost per gallon. But they did report earnings per share of $2.68, well ahead of the anticipated $2.40. Their next earnings report is coming out soon on October 12th. There were other highlights from the quarter as well, as they delivered their highest quarterly revenue and profitability in Delta's history, and they did raise their full-year earnings per share outlook. We have recently seen several Wall Street analysts decreasing their price target on the Delta stock, but they do maintain their buy ratings. In fact, the Delta stock comes in with unanimous buys from 13 analysts. The most recent buy rating comes from a 5-star analyst at Citi. They did decrease their price target to $56 but maintained their buy. They said on a long-term basis, it seems hard to believe that oil prices stay high, major economies potentially soften, and interest rate parity-driven dollar strength persists at the same time. But this mismatch appears to be in force today and could persist into at least early 2024. They believe that Delta and United look strongest among the big four against this backdrop. Overall, the average price target for Delta Airlines is just above $57 per share. That would be an upside potential of 61% from current prices. Here we can see that recent rating from the 5-star analyst at Citi, and even lowering their price target to $56 is still an upside of 56%. Many others in this 30-40% upside, with a high-end price target from 3 months ago at 114%. The second stock that is picking up attention from top-performing analysts is Eli Lilly. Their stock trades under the ticker LLY, currently priced at about $530 per share. They have seen growth of 62% in the past year, including growth of 47% in just this last 6 months and over 14% in the last 3. Eli Lilly is a leading healthcare and pharmaceutical company. For more than 140 years, they have worked to develop and deliver trusted medicines and diagnostics that meet real needs. Their growing portfolio of medicines include treatments in the area of bone, muscle and joint, cancer, cardiovascular, diabetes, endocrine, immunology, neurodegeneration, neuroscience, and pain. They are known for introducing the world's first commercially available insulin product back in 1923. Their most recent earnings report came out on August 8th, where they did come out with a beat. They reported earnings per share of $2.11, well ahead of the $1.98 expected, and you can see this was a big jump up, growing 68% year over year. The company did see their revenue increase 28%, And their management commented that exciting scientific breakthroughs, such as their trailblazer Alzheimer's disease and obesity drugs, encourage them to make significant investments that support their new medicines, including multiple launches expected by the end of 2023. One analyst from BMO recently reiterated their buy rating on the Eli Lilly stock, citing their strategic pipeline. They noted Lilly's recent data on tirzepatide and other assets demonstrate a deepening of their clinical understanding and differentiation of each drug, which is a significant strength in the competitive market. They said that their buy rating is also supported by their analysis of Lilly's growth prospects in comparison with their peers and the market consensus. The Eli Lilly stock does currently come in as a strong buy based on 17 recent analyst ratings, with several 5-star analysts weighing in this past month. That breaks down to 16 buys and just one hold, with an average price target of $593. That would be an upside potential of nearly 12%. Down below, we can see that buy rating from BMO assigned yesterday with an upside of nearly 20%, and all the price targets in the last month range between 13 to 20% upside. Going back a little bit further, we do have a low-end hold rating from 2 months ago with a downside of 11%, and that 20% is our high end. And third on our list today is XPO. Their stock trades under the ticker XPO, currently priced at $73.61 per share. They have seen phenomenal growth this past year, up 151%, including 26% in these last 3 months. XPO is one of the largest trucking transportation companies in America. They provide asset-based, less-than-truckload transportation in North America with proprietary technology that moves goods efficiently through their network. They help companies de-risk their supply chain by moving their goods using cutting-edge technology. They serve approximately 49,000 shippers with 562 locations and 37,000 employees. XPO continued their track record of earnings beats when they reported back at the start of August. Revenue came in at $1.92 billion, and they reported earnings per share of 71 cents, beating analysts' expectations by 11 cents per share. The company noted that they sequentially improved their adjusted operating ratio more than their forecast and operated with greater labor efficiency. Their shipments per day were higher than a year ago, driven by their quality of service and yield growth getting stronger as the quarter progressed. Just today, an analyst from Barclays increased their price target on the XPO stock. The analyst said that their Q3 was the 4th consecutive period of a broad-based freight recession, with incremental margin pressure for most transports coming from higher fuel prices. However, most North America transportation stocks have lagged, setting up for a better 2024. Which is interesting commentary considering how much the XPO stock grew this past year. But overall, they do come in as a moderate buy, based on 12 buy ratings and 6 holds. If we look at just the top performing analysts, that does go to a strong buy with 12 buys and 4 holds. The average price target from all analysts is just shy of $80 per share, which would be an upside of 8%. Down below, we can see that rating from Barclays with an $85 price target, which would be an upside of 15%. We do have those couple of holds, one of them on the low end with a downside of nearly 8%, and some high-end price targets closer to 20% upside. So there we have 3 stocks that have picked up buy ratings from some top performing analysts lately, but all with some very different outlooks. Some of them decreasing price targets, some of them increasing, some mixed reviews. So let me know your thoughts on these 3 companies in the comments down below. I always love hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, just showing you what those Wall Street analysts are up to. So make sure you're always doing your own research and due diligence. Thanks so much for watching. I hope you have a great day, and I'll see you back here next time.